Thank you once again for joining Dominican Rendezvous. Today I want to talk about ways to finance your property offshore or in the Dominican Republic, as the case may be. And this video is in response to an email that I got last night from a subscriber who wanted to talk about mortgages and ways of financing mortgages for overseas property. And I just wanted to give a few tips here for all of you who may be considering this, or maybe this is a question for you. But before we get there, let me just say once again, thank you for those who are subscribing. Thank you for those subscribers who are sending me emails, asking questions, making comments. As for those of you who are making comments obviously on the videos as well, hit that like button. That is very much appreciated, and it does help out the channel as we continue to move right along here at Dominican Rendezvous. Please share this channel to other people and ask them to consider subscribing as well. Now, today's topic is about ways to finance your property offshore. Now, let me just give a caveat right here that I am no expert. I'm only giving you the advice that I have learned and experienced over the years in conversations that I've had with many people who have done some financing for their properties and investments overseas. So hopefully what you find here in this particular video will be helpful for you. Now, you have come to the point where you are seriously considering investing your money, your hard-earned money, in property abroad, and in this case, the Dominican Republic. And you need to come up now with the money to close the deal. Now, let me just say this. As you probably already know, in many countries, it is not easy or even possible as a foreigner or as an expat to get financing for properties abroad or properties in a foreign country. However, in the Dominican Republic, it is possible. And in another video subsequent to this, I'll probably be posting in a few days from now, I will talk about how to finance property in the Dominican Republic as I've come to know it. Now, but in this video, I just want to talk about your options that are available to you. The first and the foremost is what everybody looks for when they think about financing, is bank financing. Now, I would say, in my opinion, and from the advice that I would give you, that bank financing is perhaps the least desirable, in the sense that there are a lot of restrictions that are going to be imposed upon that bank financing, and when it comes particularly when it comes to the terms. There are going to be lots of possible setbacks, perhaps, or restrictions, but it is doable if you keep in mind the following things in your mind as you go along, as you look at bank financing. The first thing that you need to really consider, and the banks will consider, is your LTV, your loan to value. Your loan to value. Now, your loan to value in the States, when banks are considering finances, will be pretty much very high. But overseas, and particularly perhaps in the Dominican Republic, if that's where you're looking, your loan to value is going to be much lower than you expect. I would say consider between 50 to 75% loan to value. 50 to 75% loan to value. The reason for that is they're going to ask you for a considerable amount of a deposit or down payment, and that deposit or down payment may be as high as 20-25%, depending on which bank and what avenue of financing that you use. Secondly, banks are going to give you terms that are much shorter than perhaps what you are accustomed to in the United States. You can forget about, and I'm saying this very strongly, forget about a 30-year mortgage. It ain't going to happen. You're going to get mortgages mortgage terms of much less period of time. Thirdly, interest rates are going to be higher, generally speaking, and I might also add that the rate most likely will be an adjustable rate. You need to check that with your bank to see if you have opportunities of getting a fixed rate versus an adjustable, but in many cases they will be adjustable. Again, look at it. This is not a hard, fast rule. Every lending institution may be different, but consider that many of the rates could be adjustable. Therefore, this could end up costing you more money, or that loan could cost you more money. Fourthly, I may say, and I have heard, that some lending institutions may require you to put up as surety a life insurance policy. They want to make sure they're getting their money. You better believe they want to make sure that they're getting their money. So they may ask you to put up a life insurance policy as security. Now, depending on how old you are, you may or may not have a life insurance policy, because sometimes if you're older than 70 or 75 years old, I believe, they're not going to write a life insurance policy for you. So, and if you're, say for example, you're 60 and you maybe only have 15 years left, then you may only get the value of 15 years of that life insurance policy. So look into that. I hope it's kind of clear. But as I said, some lending institutions will require you or ask you to put up a life insurance policy against that possible loan or that mortgage. So keep that in mind. Now, having said that, the other thing that you need to seriously consider when looking into buying real estate is if you are a legal resident or not. I would encourage you to be a legal resident or to get your residency, because when you get your residency, you're basically going to have the same opportunities or terms, if you will, the same treatment, better treatment for yourself that the locals or local citizens are getting when they go to the bank. Now, the banks are going to ask you, obviously, for a lot of documentation, your proof of your income, proof of your resources that you can pay back the loan, and you just check with the bank and they'll give you a list of the things that they need. So that's basically what I would say as far as mortgages in this particular video, and something for you to look into and to further consider as you look in ways of financing for your overseas investments. Secondly, you can borrow money based upon your current home equity. Now, let's just say that you have a home in the States and you have considerable amount of equity in your home. You can get a HELOC, which is a home equity line of credit, a home equity line of credit. Based upon the equity that's in your house, a bank will say, here is X amount of dollars based on the amount of equity that you have in your house, and it's money for you to use as a line of credit. You can take that money and then go and purchase a home or an investment property in the Dominican Republic in this case. The pluses for this is that the interest rates for HELOCs, home equity loans, or lines of credit, are generally lower than you would on a regular mortgage. You need to check the rates. Last I checked, the rates are anywhere from a little under 2 to 4%. So check out the rates and see what those home equity lines of credits are charging for that. Now, a HELOC makes a lot of sense, and here's why I suggest is the best form of investment if you are able to do this, is because what happens is that now you have cash and it makes you basically a cash buyer. And when you're a cash buyer, you've got muscle, if you will, to negotiate the price because you're now a cash buyer. So consider that and discount accordingly because you are now a cash buyer and not financing it as well. I would say that if you are buying a home or a house on pre-construction plans with the developer as such, and they are requiring process payments or payments as they go along, as they meet certain requirements in the building of your home, you have to make certain payments. HELOC or a line of credit will work very, very nicely for you because at that point you're only pulling out of the bank and being charged what you are or have used up until to that point. Now, secondly, I should say thirdly, besides a bank and besides a HELOC, what you can also do is basically take out a second mortgage on your home. If you currently own a home, take out a second mortgage and then mortgage it accordingly, and then you have cash available to use against your house. Lastly, I might also add, I guess there's more I could add to this whole thing as well, that another way would be financing that could be available from a developer. Sometimes you'll go to these new developments and they will say that they offer financing, and they will try to, depending on to what stage they are in the development, they may have some very, very good opportunities for financing as well. So you want to consider that if you're looking to buy into a new development and the developer there is offering some type of financing. And again, depending on the stage as to where they are in the development, they can offer some very attractive terms for you. So you need to look into that. Of course, there's owner financing. I don't highly recommend it. It's not highly I should say, popularly done in many places from my experience and from what I have seen and heard. But that may be an opportunity as well, owner financing. And then lastly, you might want to consider drawing money out of your 401k. Now, be careful before you do that. There are implications, there are restrictions, there are tax implications that may come into play. Talk with your tax attorney, talk with a lawyer to make sure that you're doing things correctly. But your 401k, your retirement plan may allow you to withdraw some money and use that as a payment for a home overseas or an investment property overseas. That's basically it. And I know I kind of just breezed right through it in these 10 to 12 minutes or so that I've been talking. If I went too fast, I just say repeat the video, check it out again, and just look at some of these other opportunities that you may have in ways, I should say, to finance your property overseas. Thank you so much for joining Dominican Rendezvous. I hope this video was helpful to you as you consider making your rendezvous in the Dominican Republic. Thank you. From me to you, Dominican Rendezvous.